All right, December 8th, 2018. What is going on in the markets? Uh, there are some recognizable patterns, most notably S&P 500 and Dow. I see a 1, 2, 3, 4, 5, A, B, C, wave 2. 1, 2, 3, 4, 5, A, B, C, wave 2. It's less clear on these other guys, but we're gonna look at the S&P 500. And we basically have a 1, 2, 1, 2, 3, 4, 5, 1. Wave 1 is done. A, B, C, wave 2 looks like it's done. And it's possible that we're in the midst of 3. And this is the same chart, right? But just messier and labeled. And what I did was I put a, this is a weekly chart, right? So just to show it's the same. We have... Right, so 1, 2, let's see. Okay, so we have 1, 2, 1, 2, 3, 4, 5, and then now we have a 1 followed by a possible ABC wave 2 flat. And what I did is I drew a Fibonacci tool retracement from the bottom of this low. This is around 2605. That's where the bottom of this thing is, and I clicked it, and I dragged it to where the retrace was, which is basically 2815, 2814, right? So, and no, I dragged it to the top, which is 2945, right? And it turns out that this level here, let me just zoom in a little bit. This level here, 2815, represents, if this is the 0 point, that's 0.382, and that's the 100%. So it actually represents the opposite of 0.618, is 0.382, right? So it actually, if you think about it, it dropped all the way down here to 2605, and it retraced 61.8%, which is right here. It retraced that, failed, came back, retested the lows, but I guess it missed the lows by 25 points, maybe 20 points, because that low was on Black Friday at the close. It closed at 26.24, and this low was 26.05 or so. So it missed it. Came back with hopes of the G20 summit between President Xi in China and President Trump in US, and after that meeting it gapped up. That early Monday morning it touched 2815 or so, and then from there on Monday it opened and it opened high and crapped. And if we look at a daily chart, that's what this gap was. So that's where I was hoping that this black arrow would happen. I was hoping that after the announcements with the G20 summit that things would go well. It open high, but then continue higher and go towards 2840. That's where I really wanted it to get to, but unfortunately it didn't. It stopped short 2815, this general region, which was prior resistance. I was just hoping that it would peak a little bit higher, but it unfortunately didn't do that. But right when it came down, I had to reverse that bullish call and turn bearish. So it turns out I wasn't able. It happened so quick. Wasn't really able to get into it until this 2735 region. However, that was the right call because I thought it was an ABC and it would short from up here, but it turns out it crapped out earlier than expected. And the thing is, when it craps out, then I knew that ABC was complete, right? The fact that it crapped out below this area into this 2730 region meant that this ABC was complete earlier than expected. And so what happens next? Well, we have a wave 1 down, ABC wave 2. You could get like a small 1-2, which is what happened. We had a 1 down to here, but then a nasty wave 2 that basically reversed all of it. And that wave 2 was a result of Fed. This was December 6th. So if you go to December 6th Fed, you'll see that this guy. Let's go to the news. Yeah, he has a wait and see approach, right? So this guy, I think it's Jerome Powell, says he's got to wait and see, right? So earlier, it was, down here, and I have this if you zoom in. So if you zoom in, this is that same chart, right? A, B, C, but just zoomed in. This here was when that Jerome Powell guy on that, I think it was November 28th, says, okay, we're gonna consider the data, because before they said, okay, we're gonna rigorously raise rates, and then the fact that they say, oh, you know what, we're gonna consider the data, then the market liked that, so it went up, and basically the market was going up into the G20 summit, and so there's further optimism, so it went up even further into the event, and after the event they announced, oh, everything's all good, and then it pops up, and the next day people are like, oh, well, actually, I don't believe that. All right, so the market reverses, and then it comes all the way down to retest this low, but then it pops back up, right? Basically, what happens is that Wednesday, December 5th, that former President Bush, the first one, had a national holiday, so markets were closed, and so that's why I issued bearish up here, because I wasn't sure. The market might open the next day and crap, and the market did open the next day and crap. Only thing is, it completely reversed when the Fed said, we're going to wait and see, right? So that's basically wait and see, which indicates that, hey, you know what? Maybe we might not raise rates in December, I think 19th, 20th, or something like that. And so the possibility that they might not raise rates made the market think, oh, that's good. And then that Friday came, and then that Friday jobs report came out, and it was bad numbers. The bad numbers made people feel good about the markets, because then it made people think that, oh, you know what, maybe the Fed might not raise rates because the numbers are actually bad. But then once they realized the numbers were bad, they're like, wait, isn't that a bad thing? Isn't it like bad that there were no jobs being created? And then the market reverses, right? So that's basically where we're at closing Friday. What happens next? I do want to point out, yeah, so we basically had a 1, 2, 3 in ABC fourth, and that fifth was a 1, 2, 3, 4, 5, and if we zoom in to 5 minutes, yeah, you'll see, yeah, we have a 1, 2, 3 ABC fourth, 1, 2, 3, 4, 5. That completes this wave 2, right? The jobs report being bad was right here at 8:30 on Friday morning, pumped up, at the market open went up even higher, and then basically starting around 10 o'clock starts puking, and so that's where we're at now. If you zoom out, the micro will be difficult to see. But when I drew this fib retracement from 2605 to 2945, that resulted in 61.8% retracement at 2815 or so. That was tested in this fourth wave here, failed. Tested in the A wave, failed. Tested at the C of 2 and failed. And so if this pattern is to play out, right? So if this pattern is to play out, we would have to break this support region. Right now we're at the support 2625, and it seems like we tested it once, twice, 3 times, 4 times. If we get a decisive breakdown, which I'm hoping for, what would that mean, right? So, if this is 100%, then usually what happens, we end up at the 2.618 region. No, the next one, that's too far, I'd say. The next one would be the 1.618, which is at the 2390, 2400 region, right? So if we zoom out, and we have this thing. We have a 1, 2. The 3 would be, the 3 would be at least the same size as 1. So if 1 was from 2945, 2600 or so, that's 340 points. Then starting from here, 2800, 340 points from there would be below 2500. It would be like 2460, which is basically right here. So this 2450 zone is here. So that's if this wave equals wave 1. Usually wave 3 will be longer than wave 1, and if that's the case, it makes sense that something in this region could be the wave 3 target. And then the wave 4 target would probably retrace all the way to the bottom of wave 1, which would be 2600. So it's possible that if we reach this region, we could get like an A, B, C bounce all the way back up to 2600. So that's my best guess at this stage. Obviously, things don't always go as planned. But right now, in order for this pattern to work, it must follow through. We can't get more than that bounce that we had on Thursday, right? So that bounce, this bounce, with the Fed saying that, you know what, we're actually gonna wait and see. That I would say needs to be a wave 2. The worst case, maybe an A, B, and then another C, a C of 2. Testing it once more. If anything more than that, then this pattern will fall apart. So it must be that at some time in the next couple of days that we break 26, 25. So that's how I'm making sense of this market right now. And best of luck with the trades.